Welcome to this webinar organized by Invest Horizon, in which we have the pleasure to have today Gonzalo Ruiz and Susie Meier. The topic to discuss is what are investors looking for? Before that, I would love to give thanks not only to these great speakers, but also to TechTour, BPI France, Meta, BWCon, IURA, EVN, and the European Commission, who has supported the organization of this panel. Also to Vittoria Bria, who has also made all the support for making this live. And also another European project called Started, who has been a dissemination partner. Rather than doing an introduction, you entrepreneurs, all the entrepreneurs that you are looking today, those deep tech entrepreneurs that are in Europe and in other regions, you're usually used to kind of pitch to investors, but today, for the first time, you are going to have investors and corporations pitching to you. And that's the first question I'm going to ask to both, to Gonzalo and to Susie. You're going to have 10, maximum 15 seconds to convince to all the audience why they have to keep watching you for the next 40, 50 minutes. Susie, if you want to start, please.
Oh, that's tough. So thanks a lot for having me, first of all. And I think the reason why you want to listen to me in the next couple of minutes is because I'm generally passionate about what you guys are doing and what this webinar is about to do. So I guess we're going to tackle a couple of questions around what exactly is happening in the market and why it's relevant to you. So from our perspective, we're B2B SaaS funds. I'm going to talk a little bit about this, but very broadly about what matters to you.
Wonderful. And then please, Gonzalo, 15 seconds.
Right. So if you want to build a business, you have to sell your product, your SaaS, to customers, very often enterprise customers. I've been doing that for many years. Not only am I now part of a corporation, but I've been incubating very large technology businesses in large organizations, software technologies. So would love to share my learnings and my thinking on where we are.
Great. And with these two great introductions from Gonzalo and Susie, we can kick off this event. For that, I would love to provide some context and what's kind of the teaser of this panel discussion. On average, for instance, we check the States, but also happen in other regions, venture capital investors only fund around less than 0.03% of new businesses. So it's very tough to get funding. Then on the other hand, we have things and we have experienced a high volatility in the past months, between 2 to 6 to 7 times what we have experienced in previous months. Not only that, as we have seen in this slide, the investment that we have seen in the arena has decreased from 20 billion to 17 in the first 6 months of 2020. My first question, according to Quantspace, and my first question for you, Susie, is these changes that we have seen in the investment arena has changed your investment strategy, has increased, decreased, keeping flat, and how do you foresee is going to happen in the next months?
Sure. So what we've seen at least is no slowdown. So I guess in the general market, there might have been a bit of a slowdown, but I think we've been on the same run rate as before. So we're right now doing about a deal a month. This has been actually quite flat for us. What I think happens a lot is that it really depends on the fundraising cycle. So, depending on where the funds are in the different life cycles of the funds, that obviously matters a lot to how speedy they can execute. So at least for us, because we just raised a new fund, I guess there was no slowdown at all. Instead, we've done a couple of things that might be quite controversial, like in the travel space or in spaces that, might not be considered very active in general. But the underlying piece is that we've seen a shift between companies that are incredibly doing well and very agile and adjusting really quickly to this new environment and this new reality, and they get valued really quickly, really highly, and become almost hotter than ever. And then there's almost like the mold, people that are not as flexible and they have a bit of a, more struggling times right now. So I guess there's almost like a divergence that we see in the market shifting away. But for us, at least, there's no slowdown at all.
Okay, interesting, and also congratulations on the new fund. I don't know, Gonzalo, whether you agree or disagree. What you have seen from the corporate perspective, do you think that these corporate startup engagements have followed the trend, has changed? What do you think? What's your perspective?
Yeah, I think if anything, these times of change that we're going through can be an opportunity. We've seen that if anything, digitalization is accelerating. across any industry. We now all have to work remotely. We have seen value chains being disrupted from in retail, in other industries to online, right? So I think as long as you acknowledge what is changing during these times and you try to capture that opportunity, I think can be great times. And this is aligned with what I've been seeing, right? Traditionally, corporate startups, the engagement, you are trying to protect and create the space to innovate and, drive disruption. Now, what we've also observed is that if anything, there is even more focus on corporate startups to actually try to capture the opportunity and try to adapt to these times. And this is something that large corporations also badly need.
And following on that direction, also I have Googled a bit about both of you, and I have seen that, for instance, Susie, you are a machine on marathons and also on piano. When you are playing the piano, you have to choose strategically which key to touch, and that is also happening with deal flow, with the startups, with opportunities. What is your secret sauce? How do you prioritize opportunities? How do you choose the best entrepreneurs?
It's such a hard question, and in reality we always get it wrong. So more often than not, we're not always spot on. But I think what I'm trying to do at least is follow a quite strict set of criteria I'm going through. So the first one is obviously I need to like the founder. I need to buy into his vision. I really need to understand what he's doing and how we can help. I fundamentally believe that there's not much value you can create if you don't really get the product. So I'm quite product driven in many ways, and I guess, a lot of my colleagues here as well. And then the second piece is around understanding how we can take this company to being a really big outcome. So not just talking about we want to scale, but actually how do we scale? How do we dive into go-to-market? How do we think about the ideal customer? How do we really make this work? So that's sort of key for me to really get early on. And then obviously there are some softer criteria around how much exactly are they trying to raise? Does it fit our proposition? Is it in the right sweet spot in terms of sector? So we obviously do only B2B SaaS. So these are smaller exercise check boxes, but I think, we can be flexible around these as long as we see what we can build together with the founder and be part of the journey.
Right. What's your opinion, Gonzalo? Because you have seen these from top tier tech companies. You have been in Microsoft, you have been in Google, you are now in... You have been now in American Express. So what's your perspective from there? Are you looking for other criteria? Are you looking for other aspects? What do you consider when you are choosing the right entrepreneur?
Yeah, so my criteria is consistent, and I try to have a very simple model, right? And that model is based on two dimensions: value and friction to adopt. Value is defined by three basic things, right? Can this company help me to generate additional revenue? Can this company help me to reduce costs? Can this company help me to manage my resources more efficiently? Cash flow, right? So no matter whether it's a small company, a large company, a partner, that has to be clear for me. The second part is friction to adopt, right? And this is especially important when it comes to large organizations. Sometimes I see that the value prop is very clear, but for me to help that potential startup, that potential company to work with me, I know that I will have to overcome a lot of barriers, no matter what organization we are talking about, by the way. So I really need to see that the potential partner has thought about that SaaS company can easily, or at least with not a lot of friction, be integrated into my ecosystem. And sometimes the answers are not quite there, and that's totally fine. But what I also look for from those partners is that flexibility and the resiliency to make things happen in my organization. So I would talk about those three basic things: is the value prop is clear, friction to adopt, and then the flexibility and resiliency to make things happen.
Interesting, this aspect of friction to adopt and how at the end of the day you validate a product and then you optimize those distribution channels. Susie, when you have an entrepreneur in front of you, how can they quickly get metrics? I mean, at the end of the day to be investment ready, how can they validate quickly those distribution channels, those customers, those selling points? What do you think?
So, I mean, it depends on the state, right? If you're talking about an open source company, they obviously have very different metrics to an accounting platform, for example, right? So we have to be a bit careful about not mixing up too many things and obviously differentiating between deep tech and the sort of more platform places and marketplaces. So a lot of different dynamics within the broader B2B SaaS space for us at least. And so when we look at metrics early on, I guess we try to tailor it to the sector and the play that this company is in. Obviously, when you're trying to get to sort of like a really good traction point, we can talk about not just revenue, but we can also talk about downloads. We can look about website traffic. You know, there's 100 different ways to understand where exactly a company is today. And the key ones for us, at least, are the ones that the founder really uses to drive his business. So we're trying to see what is he measuring, what matters to him and why, and can we learn from the way that he looks at it in order to understand where exactly the traction is coming from and why. So I think sometimes we rely a little bit on the founder to also tell us which way to go, and then almost try to assess, you know, if that's the reasonable way to look at it in this market.
Mm-hmm. And I assume that after assessing those KPIs connected with distribution, with selling, yes, with product, what do you think, Gonzalo, what is happening with the IP? Some of the audience that we have today are European deep tech entrepreneurs or deep science entrepreneurs, and therefore they have really strong technologies, discoveries, research behind supporting those products. What do they have? What are you looking for in terms of, you know, intellectual property, maturity states? What is the right moment? What do you think?
So for me, oh, sorry.
Sorry, first Gonzalo, then Susie.
Yes, of course, of course.
Going to the second point of your question, maturity stage. Ideally, what I would like to do is have a portfolio of different engagements with different potential horizons, right? So, you know, I would like to have engagements with more established organizations that I know that I can get a return in 1 year. At the same time, if organizations are strategic, they will also like to look at engagements that those returns might be 3 to 5 years. Right. So no matter where the company is, if there is consistency with regards to what the potential returns are and what the potential risks are, I will look at having engagements with the whole spectrum. Right. In terms of IP, I think I don't look at a specific KPI, to be honest. I look at different aspects of what this organization, this partner might bring into my organization, into my teams, right? Sometimes I have very speculative engagements. Sometimes I have very tangible, concrete engagements, right? But what I think is very important is have that consistency between this is where my product, my company is, right? And this is where I think you will have to do to get returns, right? If that makes sense.
Susie, please. You wanted to complement maybe.
I was just a bit too eager, but I think the one piece, at least for us, we always like to think about it less of a, you know, you need to have a really strong IP in place, but it's more of a, if the product is differentiated enough per se, the rest is almost not as relevant. So you almost can get a lot of differentiation just for being differentiated within, and you don't need to have a legal part about it. But this is crucially different to the way, I guess, Gonzalo thinks about it from a corporate perspective. So I guess we just have two different views here.
And following also in your point, Susie, in those case scenarios, how do you measure the opportunity costs when measuring or choosing between A or B?
Well, I mean, first of all, there's a lot of work going into trying to understand from the bottom up what are the different players in the market. So I think we're trying to be less just jumping on the next round because it's hot and everyone talks about it, but it's more of a market thesis. So for example, right now we spent a lot of time around legal tech. So I think we looked at about 20 companies in the space and really tried to understand what are the differences and sort of eliminating this, as you call it, opportunity costs by making sure that we track them early enough to really see who are the winners in the field. That makes sense.
Also yes, totally. And also connected with your comment, sometimes when we are measuring those opportunity costs, and especially in the deep tech, deep science arena, the type of KPIs and also the timing, it takes kind of a huge relevance. Also connected with your previous comment, Gonzalo. Now, my question for you, and I think would be interesting for the audience to see both perspective from the private investment and from the corporate side. What is your perspective? Let's start on KPIs. Are more focused on financial KPIs? Are more focused on strategic KPIs? What do you think? For instance, if you want to start, Susie, and then following reacting, Gonzalo.
Sure. So the financial KPIs obviously matter, but I think in the long story of different things that matter, for me, wouldn't be the number one. Because for me, if you get the team right, the product right, and the market right, the rest will follow at some point. Now, the question is about where exactly they are and how much does it fit where we are today. So this is the only question for me. Now, obviously, when they are in the right team, the right product, and the right market, and you can see sort of metrics come through, then what I like to understand is sort of how exactly is the increase in uptick in each MRR level, for example. What is the net new MRR? What is the upsell? What is the, like, you have 100 different things to look at that stage, right? But it's almost like a result. If you did everything else right, this typically comes out of it.
Gonzalo, do you agree? Do you disagree? What do you think?
I agree. I have, from a corporate side, I have a slightly different approach. I like to start with hypotheses and waves of change that I think will be particularly relevant to my teams or to my organization. Meaning, we have this hypothesis that customer interactions may be disrupted and evolve in such a way. And once we get consensus on the hypothesis that we want to focus on, then we try to focus on organizations that might help us to explore activities and progress in that space, right? So that's one approach that I take to prioritize. It may not necessarily be based on hard dollar APIs, KPIs, but that's the approach that we take. On the other side, I also look at soft KPIs, if you wish, right? Very often we undervalue the potential of culture, the potential and the excitement that colleagues and experts go through when they engage with startups. And for me, that's equally important as well, is to give my team members the opportunity to get an external point of view, to get an opportunity to work with more nimble, more agile organizations. Sometimes we know that we will not get a specific return on dollars, but there is a lot of soft dollars in there that I think are equally interesting to explore.
And also, Gonzalo, following your point, when we are considering those, on the one hand, strategic KPIs and financial KPIs, and also tracking those hypotheses that you discussed, sometimes or usually investors and private investors and corporations have some internal timelines, let's say. On average, for instance, for private investment, let's say around 7 to 8 years is the average on having that return on, let's say, normal startups. But when you have some deep science, some deep tech, that takes longer, maybe 15 years. What are your timings from the perspective of a corporation, or what do you think should be the right timing? Should be 7 years, should be 15 years? And any recommendations for keeping that in mind to the entrepreneurs?
Yeah, so I think you have different, again, I try to manage my engagements as a portfolio. Portfolio with different risk profiles, with different return horizons. Traditionally, in large corporations, you will see that the easiest way to jump is to be able to justify a return on a year. That's the budgeting cycle, right? All organizations go through that process. It is important to know in there what is that cycle, how it works in each of the organizations that those companies may want to work for, because timing is essential. Meaning, if you are trying to land in that organization, chances are if you are starting that conversation at the end of the budgeting planning, if budget have been allocated, you will have less chances, right? So you have to really understand that process. Now, we all know that with startups, depending on what the phase the startup is, it is difficult to get a concrete return on 1 year. And that's where I will jump to the different horizons and the different risk profiles, right? And for me, I would look at 3 phases: 1 year, up to 3 years, beyond 3 years, right? Beyond that, I personally feel that with the pace of change that we are seeing in the technology space, it is very hard to actually make an investment or accept an engagement if beyond that horizon, you don't have clear signals that you may get a return.
Susie, any reactions?
Well, I think, for us, because we have a bit of a fund cycle, a time limit to some degree, right? It depends really where we are on the fund cycle. So for example, the new fund now has a 10-year life cycle. So now we can think about an 8-year company. So we tend to invest a bit earlier. But then if we would say the last 2-3 investments of a fund, they typically need to be in a later stage place where we can see a little bit the 4-5 year exit almost. So I think it really depends a little bit on where we are. But then the second piece, I don't think we would ever have the patience to do 15 years. So that's very much corporate play versus on our end. At the same time, I think that's why a lot of funds now have set up like a, an earlier stage fund and then an opportunities fund, where some of the really interesting ideas can be passed on internally and make sure that the company gets the support it needs for the longer time frame, even though it might not fit the, strictly speaking, very time constrained model. But at the same time, I think the one cautious tale that I always say is that we see a lot of companies or founders coming to us and say, I'm going to IPO in 2 years. And while, this might be great and we love to see those quick stories, the reality typically is a bit different. And typically it means just we have to be a bit more careful. So it's not just us being patient, but also founders being a bit more cautious sometimes that things might take a bit longer.
Mm-hmm. Then here, coming from both answers, a message maybe for the audience, for those entrepreneurs that are watching us today, is before approaching an investor, we have to really understand what is the strategy behind each investor, because sometimes are different time horizons, different KPIs, different stages of the portfolio of the type of engagement. Also following on that direction, Susie, what do you think that a private investor can offer to an entrepreneur that a corporation can't?
Oh, wow. Now you're really putting me on the spot here. Well, obviously, if you have someone like Gonzalo, you should go for him. But I think what we hopefully can offer a little bit is the flexibility that we don't have any agenda apart from really making this particular company as great as it can be. And there's no strategic constraint we would ever face at all. So I think that's the key difference. Apart from this, I guess from a corporate, you obviously get the very good support that you're being plugged in so well into an ecosystem, which we couldn't offer. So I guess it depends a little bit what you're trying to get out of the relationship.
Mm-hmm. And Gonzalo, what do you think is the uniqueness from the corporate perspective?
I couldn't say it's unique, but I think it's definitely a strong point. If the value proposition is aligned with the other areas of the organization, I think you really can have a platform to grow, accelerate growth, right? You can have the platform from a distribution point of view, from a marketing point of view. You can try to leverage the synergies with the other businesses. If the main brand is aligned with the aspects of the startup, you can also chime in that aspect, right? So I think if anything, you have to find that alignment, and if so, you have a platform there to accelerate growth. At the same time, as Susie mentioned, you might also be more constrained to expand beyond what that organization has done in the past, right? Because potential competitors might perceive you as a risk, so on and so forth. So I think it's a trade-off. But definitely, I think part of the advantage is that it can be a platform to expedite growth.
Mm-hmm. Then also, again, I see a pattern here that as an entrepreneur, we have to choose strategically with who we want to engage, either a corporation or a private investor, and then when is the right moment. But sometimes choosing the right moment is not that easy, or sometimes to get that information is not that easy. Do you have any recommendations? If I am a deep tech entrepreneur in Europe, when is the right moment to approach an investor or a corporation? Is more early stage, is more later stage? Do I have to, what are the homework that I have to do before in terms of milestones or other things? When is the right moment? Any of you, whoever wants to start.
Gonzalo, you?
Okay. Yeah, I think, first of all, there is a lot of information now publicly available in the internet, right? In my experience, the investment hypothesis, the hypothesis that I mentioned before, you can get a lot of clues, if not 100% transparency on what both investors and corporations are looking for. So the first sort of advice in there, make sure that you go to the public sources of information and you really get to understand what each of these organizations are looking for first. Second point, this is my personal opinion. You will not know if you don't try. And to know, I think there is no harm in asking, as long as there is consistency between what you're asking for and where you are. Worst case scenario, you will get told, not now, but maybe in 6 months' time. right? So I think that the second advice would be, once you know what each of these organizations are looking for, ask and be transparent and accurate.
Mm-hmm. And Susie, maybe I'm going to introduce something additionally to the question, that is, yesterday we were filming another video with other investors, and one of the sentences of that speaker was, investors are looking in lines rather than dots. In the sense of that, when
Yes.
you are looking for an investment and you achieve that investment as an entrepreneur, is because you have a longer relationship with that investor. They have been following maybe for days, weeks, months, or years. When do you think, when I want to approach an investor, is the right moment to start that relationship?
Such a great quote. Honestly, I think I can completely buy into this. So, at the end of the day, we look at it as a marriage, right? You see someone today, you really want to be part of the journey, but it's going to be a long journey. So the more data points almost aligned that I can see, the more likely I feel comfortable, and I get a lot of comfort from what you've been telling me for the last half a year. And I can see that the truth, it comes out. So I can really see how over time you developed and how you reinvented yourself. So I think that's absolutely fair statement. The only two other pieces that I will say. So first of all, I think it's never too early to engage because of this line effect. And even if it doesn't have to be a pitch. And I think that's what people always get wrong. Building a relationship doesn't need to start with a formal pitch. It can start as easy as a 15-minute nice call. Talk to me about your ideas. Maybe I can help you. Maybe I can introduce someone else. It doesn't have to be straight away the perfect pitch at the perfect time. So I think people sometimes wait for the massive breakthrough contract, and then they want to show off what they've built, which, sometimes people build amazing things, but it just takes a little bit of time. So I'm always super happy to just talk to people right at the early stages and just trying to figure out with them a little bit how to restructure the deck, how to think a little bit different about markets, because there's huge differences in between different markets. And then the second piece is, once you talk more formally to people, I think don't screw them over. So some people have this tendency to tell different stories to different people because they think they now know how to play the system and how to phrase the story to make it a Series A round for the Series A investor and a Series B round for and it just doesn't work. So I guess just consistency in the storyline, where you are, where you've been a year ago, and just getting the same facts out is so crucial. And also to the vision, right? You cannot tell me what I need to hear. You need to tell me what you actually want to do, just to make sure we have a clean starting point together. But it's never too early to start an easy conversation.
Mm-hmm. So you have background speakers, what is happening behind. In the Q&A, we have started to receive a lot of questions from your comments. For instance, we have one from Ashley that we will answer a bit later, but just also for all the audience, you can continue introducing questions in the Q&A. In a few minutes, we are going to arrive. We just have 2 or 3 more questions before arriving to the Q&A. And for that, Gonzalo, my next question now is more kind of foreseeing the future. What do you think is going to happen in the investment arena and in the corporate startup engagement arena in the next 6 to 12 months?
As I said, we are going through a lot of disruption. We are going through a lot of change. I think what is obvious is that there is going to be a lot of focus on digitalization across every single industry. And I think there is a great opportunity to capture if value propositions are aligned with that change, right? And I don't think this is going to slow down if or when we go back to normal and the situation is under control. I think this is being the spark across industries that are actually going to open the eyes to many more traditional organizations that may have been reluctant to jump into the boat of digitalization, into the boat of technology. So it's going to be tough in the sense that we also see, budgets being more under control, more focus on costs. But I think there is a great opportunity to capture in there. So be resilient and focus on that sort of trend wave that we are seeing in the industry, because it's not going to slow down.
And in the future, Susie, what do you think are going to be the hottest opportunities?
Okay, let's think about the future in a short-term and a long-term way, right? So I guess, as Gonzalo, I mean, for sure, digitalization goes throughout all industries in the next 20 years, right? It's no doubt. But I guess in the short term, at least, we see a lot of hot things around making Zoom better in many ways. So i.e., how can I not be full of Zoom fatigue, but how can I maybe have a bit of a different tool that makes me feel like I want to have another 100 calls in the next 2 weeks on Zoom? So all those tools, I think, are just like really hot right now. And then the other one, everything around digital health. So really making sure that people get the medication they need online without abusing the system. So I think there's a couple of hot sectors now. And obviously, unfortunately, a couple of ones like travel that are a little bit less hot at the moment, at least for a couple of investors. And then in the sort of medium to long term, though, you're going to see a shift to things that are obviously the future of work in general. So there can be a lot of different things, right? There can be the likes of superhuman that are just making your emails better. There's a lot of things around the broader future of work. But then the big trend, at least that we see, is open source. And I think everyone's talking about it these days a lot, but sort of making sure that these community works and network platforms really get the traction and get the credit they deserve, and actually pushing it out to be more collaborative, because actually that is future of work, right? Making people work collaboratively, more efficiently together.
Mm-hmm. Last question before opening the Q&A, and only you have, each of you, 20 seconds. If you have in front of you a European deep tech entrepreneur, what would be the main recommendation to apply tomorrow at 9 a.m.? Gonzalo, if you want to start.
To apply, you are not only choosing someone to raise money, you are choosing a partner. Mm-hmm. Partner to go through a long journey that is going to be tough. So, it's not only that the investor will choose you, you are choosing the investor, and make sure that there is synergies in there. It's not only about raising the funds.
Okay, so this is a long-term relationship. Choose a partner is not just an investor. Susie?
Couldn't agree more. I think you said it all. The small piece I think that matters a bit is make sure that this person really understands what exactly is the deep tech and how deep is the deep tech, because there's obviously really deep, and then there's always mediocre, and then there's like a higher level. So I guess making sure that you really understand how long sales cycle will take and be clear about it, and just make sure that the patience level is aligned as well with this partner.
Okay, and now with these two aligned answers, we start the Q&A. The first question is coming from Ashley. In this case, she is explaining her case. We are, and I quote, summarizing, we are an early stage biotech developing a product, and then we have received several feedbacks from investors saying, this is not fitting our strategy. What does it mean from the corporate and from the VC perspective? This is not fitting our strategy, and how can we tackle that? Any of you?
So I think from a corporate point of view is that there is no alignment or obvious alignment, right? Now, you may want to go deeper into why that alignment might not be in there. It might be that you are assuming some false assumptions that might not necessarily be the value generator that I'm looking for. If that is with a bunch of, or a small number, that's totally fine, right? Just seek for extra validation, extra feedback that may or may not confirm that sort of feedback that you are getting, right? But I think it's also a great opportunity for you when you get such a feedback to listen, be self-critical, and think whether there is feedback to incorporate in there with regard to your value proposition, with regard to whether you are pitching to the right group, to the right organizations. So always take feedback as valuable input.
Mm-hmm. Susie, any adds?
To be honest, I think that's always a decline where people can't really specify what exactly it is. So I think it's a very generic response. So the best response to this is asking why exactly doesn't fit today. and what exactly can be done differently. So for example, sometimes I'm saying, I don't think it's a match. And then, the person comes back to me and says, why? And I'm explaining what exactly I'm looking for. And then they help me clarify that actually it could be a match. Sometimes it's just not obvious. So a couple of times I look at decks and I feel like that's a B2C proposition, but then I bounce it back and they say, no, actually it's a B2B. So, sometimes just actually clarifying what it is that we're looking for, and also then just explaining what exactly is it that you're doing and see if there's a fit. But the second piece is, why don't you at least ask whom I know that could be a fit for you? So sometimes I don't know all the B2C investors, right? But I think I know a lot of the B2B earlier ones, and we're Series A. So I think for a couple of founders, it's not quite clear what early means. So sometimes early is pre-seed, sometimes it's seed, sometimes it's A. So it's not straightforward to figure that out from websites. So if you tell me, actually, it's not a fit for us today because I think you're a bit too early, but you might want to speak to person X, Y, Z. And then you follow up and say, actually, person Z looks really interesting. Can you help me? Well, might help you. I might not know enough to actually introduce you, but at least you can try, right? And you can't lose.
In those discussions, and also I'm going to try to connect the following question from Melanie. We are a deep tech startup in which we are in the let's say fundraising mode, and they explain that now they are negotiating with investors their term sheets. Now the question from Melanie is what they are looking for in those term sheets, the investors, what they have in mind. And from the entrepreneur perspective, what they have to be careful with. Any of you?
Well, there's a couple of key things that you got to watch out. A, dilution, right? Key piece, you don't want to get too diluted right away, especially at the early stage when it's probably your first institutional investor. Make sure that you don't give away too much. Now, the question, what is too much? I don't know. It's very specific, but I guess just be careful around dilution. Second is bad lever. I think that's a key one. So make sure that there's some friendly agreement on what exactly it means to be a bad or good leaver. And then another key one is what exactly is the board level control? So, how involved can this person be on your board? How much do you want them to be involved? So just making sure that you get those dynamics right. A smaller one would be for me around what exactly is the additional level that you could invest. So do you have a right of first refusal as investor? Do you want this as entrepreneur? So there's a lot of discussions around those points. I need to think if there's something else come to mind, but why don't Gonzalo keep going, please?
That's your
I'm
area.
missing something.
So I couldn't say it even more.
Perfect. Then maybe we can jump into the last question because we are arriving to the end of the webinar. This question is from Mike. We are in a startup in Europe and we are trying to approach several corporations. They are offering different corporate startup mechanisms from accelerators, incubators, funds. What do you recommend would be the right strategy or way to approach those corporations? How can we select the right door to enter to a corporation through an accelerator, a incubator, or a corporate venture capital? And Gonzalo, that's for you.
Yeah. I think I will start with what is it where you are and what you want to get, right? I will go back to the comment that Susie made that we use accelerators, incubators in very generic ways, and organizations mean very different things. So understand what you need and what each of the programs are going to offer you, regardless of whether incubators or accelerators. Meaning, do you want to get extra validation from a corporation? Do you want to get access to a distribution channel through Salesforce, through customers of that organization? Do you want to raise funds? Do you want to have marketing boost, if you wish, through marketing investment from that organization? Do you want to get technology partnerships as well? I've been part of the Microsoft incubator program, and in there we put a lot of focus on technology validation, technology investments, right? So I would say don't choose a program on the basis of it is accelerator, it is incubator. Choose a program on this organization might provide alignment with what I want to achieve, right? And of course, the third dimension is completely different, which is corporate venture fund. At the end of the day, is down to raising money and again leveraging the synergies of that target organization that you may be thinking about.
Perfect. Now that we have tried to answer the majority of the questions or some of the questions in the Q&A, we're going to spend just the last 3 minutes providing some additional information that some of the audience requested and some of the partners requested. The first one is for those who want to understand better what's happening in Europe in terms of deep tech, deep science, investment, and also corporate venturing. Here you can download right now with a mobile phone the QR code of this latest report with the European Commission. Next is what is going to happen in the forthcoming months on terms of Invest Horizon in the project in the program where this webinar is involved. Is not only the following webinar on December the 3rd, but also we're going to have different pitching and forum sessions in different sectors and subsectors. Thank you very much for all the audience that you have been following us. Thank you, Gonzalo. Thank you, Susie. You are incredible speakers and experts. I have learned a lot. I have taken some notes that I will follow up with each of you. Hoping to see you in next webinars and courses. And thank you very much.